Hello friends, welcome back to part 17 of my Tesla earnings forecast video review series with my partner Loki here, who has decided to get out of bed and come over and visit me and say hi. So I don't have to share the Loki's bed cam with you to hear his yawn. Yeah, he doesn't always vocalize during his yawns. Love you, buddy. I gotta get back to the forecast review though, okay? That sound good? You're a sweet boy. I wish you would eat your breakfast. So if Loki eats his breakfast, I will move the camera so you don't miss a second of the action with this little chihuahua eating his food. But for now, I will share my desktop and scroll on down to the next tweet. Loki's going to go either back to his bed or to eat. What's he going to do? He's going to get back in bed. Alright, so I'll lift the camera up so you get a little bit better angle on him tucked in behind his blanket, hiding in the back. And I'll show you the next slide here, which is the GAAP EPS, the trailing 6-month average stock price, a few alternative methodologies for stock price forecasts, a little nerd emoji here. Not trading advice, do your own research, not financial advice, for entertainment purposes only, etc. Some rows I use to forecast stock compensation expense and non-GAAP earnings at the bottom. Well, this is way too small for you to see as it was in the previous video, so I'm going to close out of this and go right back to my actual live earnings model, dated May 7th, 2023. And I'll just continue the tour from where we were in the previous video. We left off on the deferred tax asset flowing through the P&L over the past couple of actual quarters and what I have in the forecast for the next two. So what's the next thing here? It's a Tesla stock price forecast at a 30x multiple on the following 12 months worth of adjusted EBITDA non-GAAP. So what is this row doing? Well, for a long time, that calculation, the 30x multiple on the next 12 months adjusted EBITDA, mirrored the stock price pretty well. That was mostly during a bull market that was happening. So if you go back to 2019, you got, $44, $50. That's high relative to where the stock was trading at the time. I think it got as low as $12 in the early part of Q3. But then it took off and got closer to these numbers pre-splits. So one of the splits happened here. The 5-for-1 split happened in Q3 of 2020. And then a couple of years later, in Q3 of 2022, there was another 3-for-1 stock split that got us to where we are now. So that's what that calculation is doing. That's where I came up with that number. A 30x multiple on adjusted EBITDA isn't a thing during bear markets like the one that we're in right now. So Tesla's trading a long way from this number, $356 per share right now. But if it gets back to a 30x multiple on the following 12 months worth of adjusted EBITDA, soon, it'll be back in this range. That's a lot of ifs, and none of that is trading advice, as I just mentioned. But that's what this row is doing. If you find that useful, helpful, or entertaining, or informative. What about this one? Trailing 6-month average stock price. This is a pretty good comparison point against what you see on the row above. So some of the quarters, these numbers were pretty close, and some of the quarters, they were not all that close. They've been kind of dogfighting over and under each other over the past several years, and I'm sorry if I'm making you dizzy scrolling back and forth very quickly on those. So that's what that row is good for. What about the trailing 6-month market capitalization? So this one's easier to think about than the stock price is, because those stock splits happened, and if you remember what the price actually was at the time, you'll confuse yourself looking at what the split adjusted price would have been at the time if the split had happened already. So this one's a little bit easier to just go back and look at, oh, Tesla was less than a $50 billion market cap stock for most of 2019. That's a little crazy, but 4 years ago, Tesla was trading at about 1/10 the valuation they're at today, by rough order of magnitude. So over a trailing 6-month period, the market capitalization for Tesla is now $553 billion after peaking a little over $1,000 several quarters ago, actually peaking right when the bear market began, so that makes sense. Next, we've got highest CEO plan market cap achieved. So a bunch of these rows here were for me to be able to estimate how much CEO compensation plan expense there would be. So I'm not using those right now because Tesla has already vested all of the 12 eligible tranches maximum that Elon could have earned under his most recent CEO stock performance-based award plan. That's a mouthful. So you can see how that was achieved over time with the market cap getting there in Q2 of 2021. Then the annualized adjusted EBITDA tranches are here. There was one at 1.5 billion, 3 billion, 4.5 billion, not even shown here because Tesla got to 6 billion so fast. 8, 10, 14 was the top, and Tesla got there over a year ago. Then the last milestones to be tripped in the plan were the revenue milestones: 35 billion, 55 billion, 75 billion, 100 billion, and 125 billion will be achieved later this year, but it doesn't matter because of the 16 possible milestones, Elon was only ever eligible to be paid for 12 of the possible 16. So these don't do anything. Or they don't result in Elon being able to buy any more discounted Tesla shares than he's already entitled to, which is all of them under that plan. So I've got a quarter-ending date field here that helps with calculations sometimes. Here's the CEO bonus forecast. He's already achieved all 12 milestones eligible. So there's 4 milestones that he can't achieve no matter what. So 12 tranches have vested, and the bonus shares eligible or vested are 304 million shares Elon can buy at the same price that trading opened for Tesla on, I think, March 21st of 2018, something like that. Okay, so what did I use that for? I used it for forecasting how much CEO stock compensation there would be. I do have a forecast in for Q3 and Q4. I got $50 million worth of stock comp for Elon in Q3 and $150 million in Q4. This may not happen. I may have to zero these for the next year if the board of directors doesn't hurry up and propose some stock compensation for Elon. Until they do, he's working for free. That's what this means. Now, let's not feel too bad for Elon. He is the world's wealthiest person, or vying neck and neck with Bernard Arnault, who owns LVMH. I hope I got that right. Who is sometimes the #1 wealthiest person in the world. Elon's not standing in line for soup. He's doing fine. Then but you should pay the most skilled person on earth at growing companies. So any other company who wanted to hire Elon to be their CEO would need to pay them. So it makes sense for Tesla to continue paying Elon. Next is other SG&A stock compensation. Other people earn stock compensation besides just Elon, who were paid out of the SG&A area of Tesla. So I have a forecast in for a little bit more in Q2 than actually hit in Q1. Then there's non-stock SG&A expense, which I have growing by a little. I've got that growing by, 4% sequentially versus where it was last quarter. To make total SG&A expense a little bit higher, so you can see now where that number came from that we saw in the previous video. Then there's also stock compensation that hits in cost of revenues for people who work at the factories. Not everyone knows that when you work for Tesla, even as an assembly line worker, you're eligible to receive part of your compensation in stock instead of as cash. So that's where that hits. Then in research and development, people are also paid some stock compensation. And there could be some in restructuring and other, and sometimes is if people are paid out severance stock compensation upon being laid off. Making total stock-based compensation of the amounts you see here. So I have this forecast a little higher every quarter for the rest of this year. Sometimes an amount hits this other, including dilutive convertible debt line. I don't have any forecast for that line. Some quarters it is 0, so 0 is an okay forecast for this. And that's how you get to your non-GAAP earnings number of $4.6 billion. So you add the stock compensation to the GAAP net income number, and that gives you the non-GAAP earnings, which as a percent of revenue, I have growing from 12.6% last quarter to 15.3% this quarter. Excuse me. And we're getting close to the end of this slide, I think. Let me skip back to my thread and see where this ends. Well, that was it right there. As a percent of revenue is the last line. So that's where I'll end this video. After checking back in with the blue blanket cam that doesn't even show Loki right now. Maybe I'll move it for the next video. And I'll outro and say if you've enjoyed today's video, click the like button. If you're not subscribed to my channel already, why not go ahead and subscribe to my channel over here? That's free to do. Or click the like button or reply to this video. Any of that stuff's free. Or if you'd like to support me, if you think that my videos are worth it, you can do that on Patreon, or you can subscribe to me on Twitter. It's cheaper to subscribe to me on Twitter, only 69 cents per week. Buys you access to all of my subscriber exclusive content, which is mostly just fun stuff or stuff too mean for me to tweet from my public account, and where I share these videos embedded as tweets on Twitter for my subscribers only the day that I upload them. And thank you especially to my executive producers, Kathy Kitchler and Rebellionaire.com, and I'll see you in the next one.